Hello, everyone, and a very warm welcome to this week's Gold and Miners update for Wednesday, October the 9th, 2024. I know I am a day or two earlier than usual. And remember, last week we showed you the dreaded overlapping diagonal. And this week we wanted to show you that we believe that we are getting close to a bottom. So we want to alert you to the fact that this wave 4 in the dreaded diagonal might be complete and that wave 5 will soon be on the way. Of course, contingent on holding above certain price levels. So that is why we want to be out early today. So you are the first to be aware of this fact. I've looked at some other people's work, and so far, very few people are on the ED bandwagon. And either I am completely wrong and they are right, or it is the other way around. Again, I'm not here trying to piss on other people's property, so to say. I just wanted to point out that we are still, I believe, on the right side of the trade, and that's what matters. So let's start here with gold. This is the closing price chart, and we expected this pullback to about ideally 2600 to be underway. And let's see where we currently are, because unfortunately gold stock charts doesn't update the gold continuous contract until after hours, and we're currently sitting at 2626, 0.35% lower price than yesterday. And we're getting oversold on the RSI 5. You can't see it, of course, on today's chart. And we've broken below the first warning level already. And we're probably right here at the second warning level for the bulls. Only below the third and the fourth will we have to seriously reconsider and change, respectively, the wave counts that we are tracking. But otherwise, this looks really good for this anticipated wave 4. And I'll show you the candlestick chart as well, as you can see right here. And here on a daily candlestick chart, we have slightly different prices because we're not working with closing prices, but highs and lows. And you can see we've now broken below the second warning level, which pretty much tells us this fourth wave is underway. The third wave is complete. Only if we break below 25.75, and especially below, I would say here, that is 23.50, will we really have to reconsider. But otherwise, so far, so good. We've reached this symmetry upside target, and I believe this wave 4 is underway, and then a wave 5 would be quite awkward to just fall off the cliff on very overbought conditions, as you saw here for this wave 3, as you saw here for this wave 3, and as we saw here, slightly less for these waves as well. So most of the time, of course, we're going to then get a decline to get rid of the overbought conditions. And corrections in the market can either be in time, like this fourth wave here, or they can be in price, like, for example, the second wave we had here earlier. Oh, no, actually late last year. Currently, it looks like we're seeing a correction pretty much in price, as this is a quite steep and fast drop. So far, so good. No warnings whatsoever for the bulls, other than, yeah, okay, we had a radar lock and a proverbial shot across the bow, but no damage to our wave count. That is the whole point. If we start breaking below 25.75, we start to see damage to this wave count. And that's, of course, not what we want to see. If we then go to our ETF, GLD, we can see the same. This was the ideal wave 4 target zone, and we have reached it. We are right at the second warning level for the bulls, and the price action from the all-time high at about 247 still looks corrective. The black boxes on the RSI 5 show that we are getting oversold on the RSI. Every single time that has happened over the last year, it meant we are getting very close to a very good tradable bottom. And again, this still looks either like a simple impulse as well. We topped here at 161.8. And we have not overlapped with this wave 1, and then a wave 5 to about 255 to 260 potentially. We have similar setups here in the money flow, or the Jenkin money flow as here, as well as the MACD, of course, as we had here for this 3-4-5 setup, as you can see. I also want to point out, of course, the MACD has been making higher highs, as you can see there, right? So that one still confirms higher prices. We kind of want to see a lower high, as we saw here, right? That's kind of what we want to see. For now, we have simply higher highs in place, which really means, okay, we should expect a lower high before things are said and done. The same we can see, of course, for money flow, right? It's a similar type of setup. That's what we're looking for this completion of wave 5 on negative divergence. Ideally, it doesn't have to be that way. And once again, this is still a pullback within a strong uptrend. It's the first time we go below the 20-day simple moving average since pretty much early August and July. So that matches with the wave count as well. And I expect here a bottom in this 240 to 235 target zone. So we're getting close, we're getting oversold. I have no signs of a reversal yet. That will be pretty much on a break back above 245. So again, we are getting very close to the ideal target zone. This is why we have the bottom alert slide. How about silver continuous contracts? Similar to gold, I have no update on stock charts, unfortunately, for today's price action, but I think silver is up like 0.2% for today. So we're getting pretty close here for this potential wave 4 at the 61.8% extension. It can go lower. It can even go to 38.2 or 23.6. It cannot go below the end of wave 2/B, which is the start of wave 3/C. I also want to point out that we had a nice ABC higher with C being 5 waves, and that we reached 123.6% extension right here. Then we have an A, a B, and a C as a irregular expanded flat wave 4. If our analysis is correct, of course, contingent on holding above the price levels, then we should now see soon a wave 5 to about 34.5. That's 161.8. And then we have a 5-is-1 relationship. Okay, so that is 5-is-1, which is quite common. We can even extend as well. That, of course, didn't get saved. Sorry about that. Then we get a nice 5-is-1 relationship. I can use this one instead. That, by the way, the tools you saw is our algorithm-based trading, fully automated. So if you're interested, please send me an email and it will trade for you. You simply have to have an account at Alpaca with enough money in it to allow for potential day trades. So there we go. So we've reached 123.6 at 61.8, and then a 5-is-1 targets 34.5. That's the ideal preferred wave count until proven otherwise, and proven otherwise will be ultimately a break here below 28. We've already a severe warning right here where we currently are at this wave 1A, because in a standard impulse 4 and 1 don't overlap, only in the diagonal. The diagonals are less reliable price structures. So there is definitely more uncertainty, but I still would prefer this. SLV, that's the Silver Trust. Same here, we've reached the ideal wave 4 target zone as well. An A, B, C wave lower so far. We did 5 waves up here as well for this wave 5 into the ideal. We missed the ideal wave 5 of 5 target zone, but the B wave did the trick, which is often the case. And once again, we're getting quite oversold. It's a condition, it's not a trigger. And right now we are we are also below the third warning level. So if anything, we do not want to go much lower, of course. And I would say if we really start to go below 27, it really puts a severe dent in the wave count. But I'm going to ratchet this, of course, there. I don't know why that one got moved up. But we now have overlap soon with this wave 1 here. I think that was the idea of these levels there. So that is what we're looking for. And I'm going to lower this one actually as well to here, which is there. I think it's a little fairer assessment of the price action. So there is then wave B, and let's do a Fibonacci relationship between wave A and wave C measured from wave B and see where we end up. And as you can see, we've extended quite far now. to potentially a 200% extension. Almost a 200% extension is right there at the lower end at the 61.8. So again, bottom alert, getting oversold here, and compare that to the wave 2, compare that to this wave 2, the wave 4, compare that to this wave 4 and the 1-2 setup, and here the 1-2 setups, and here the wave 2 setups. So this still looks pretty good in my humble opinion. So that's why we have a bottom alert where, once again, the risk is low. There is no risk. And why do we have alternative wave counts? Why do we have these warning levels? It is like a car insurance. Okay, when we get into our car, we don't expect to end up in an accident. But there are plenty of accidents on a daily basis. And as we know, 50,000 people die each year in car accidents. So even something as mundane as driving a car is actually deadly. So that's why we have our insurance, just in case we don't make it to our destination in one piece. God forbid we die. That, of course, I don't wish on anybody. But we can always end up in an accident. It could be a scratch on your car when you park it. It could be totaled. Very simply, even at 10 miles per hour, you can total your car, believe it or not. These days, when all your airbags go off, most of the time your insurance company will actually consider your car totaled because it's a liability to put all those airbags in. It's very expensive. Oh, well, that aside, we're not in the car insurance business, but we are in the making money business. And in the making money business, you want to lose as little as possible. This is quite obvious. I mean, it's quite this different statement. To make as much money as possible, you have to lose as little as possible. That's really, really crux of the matter. Unfortunately, most people focus on the profits. 6 losing trades are out. Your trading sucks. Your system sucks, and all that stuff. And then what we completely forget to look at is the big picture. We forget to look at the forest, and instead we are looking at the trees. If this is our performance over the year so far for our short-term trading systems for the S&P 500 Nasdaq, this is where most people give up. They're about -7%. They say we suck, and this is where you would have been if you just stuck with it for a couple of months longer. Remember, trading is a marathon, not a sprint. Anybody who treats it differently will not make the finish line. That's simple. Just as you will not become first if you treat sprinting as a marathon. Anyway, moving on, long story short, wave 4 here for the silver miners reached the target zone. So far, so good. This is now the potential pattern we're looking at, the path wherein this price action should unfold. And we're right here at the ideal target zone. And I'm looking now for $40 to $42 for this to complete, something like this. Not as oversold yet as some of the others, but target zone reached. So that's why we have a bottom alert in. Okay. I have no signs of a bottom being in place either, but we believe this is then often a low risk setup and a high reward, but it's not no risk. All right, moving on to the gold miners, GDX. Again, also here, right here in this ideal wave 4 target zone, as we put out on Friday, and we have reached almost an ideal CSA relationship. As you can see here, this is A, this is B, and then this is C. And we can count 1, 2, 3, 4, 5 waves lower. I'll show you that for GDXG, even more pronounced. Very nice 5 waves lower for this C wave. But we now need to see a reversal. And back above, of course, 41 would be a very good sign the correction is over and that we are on our way to 45 plus or minus 50 cents for this ideal wave 5 of 5 target. Again, the 5 is 1, targets the 161.8. So this still looks like a nice ABC higher for 3, ABC lower for 4, and then an ABC higher for 5. Okay, that's the preferred path, oversold. And if history is anything to go by, that often led to nice bottoms. So then GDXG, you can see here the A, the B, the 1, 2, 3, 4, 5. We bottomed yesterday in the ideal wave 3 target zone. We reached the ideal wave 4 target zone at the close yesterday. And now we're getting once again close to the ideal wave 5 target zone. We don't have to reach it. We are already at this CSA relationship at today's low, which is the 50% retrace, as you can see here, or extension of wave 1 measured from wave 2. That's probably the better description. So we're in this ideal wave 4 target zone. Normally, I'd like to see it between 76.4 and 61.8, but beggars can be choosers. And then we're now expecting a 55 to 98, sorry, 55 to 65. I don't know where I get 98 from. Target. Oversold has led to nice, at a minimum, multi-day bounces, at the maximum, new rallies. So this looks pretty good. Again, a higher high on the MACD here as well, a higher high on the money flow as well. So that all supports that we should see higher prices going forward as well. That's on GDXG. On GDX, we have the same. As you can see here, we had a higher high right there. The change in money flow is different than the than MFI, which is more RSI related. So they're a little bit different, but you can see here we have similar setups, as you can see. June, July there versus now, and a little bit like here as well. So as we move lower, we start to see money flowing back in. That's always a good sign. All of these are conditions. They're not triggers. Triggers are price. And again, if we get back above last week's high, I think we're in very good shape. So Wednesday, Tuesday, Monday, and then this is Friday. So that's pretty much last Wednesday's high. If we break back above that one there, that would be a very good sign that we are in the wave 5 on all of these ETFs, and of course, continuous contracts for gold and silver. That's really all I have for now. Again, we start to get very close, or already in the ideal wave 4 target zones for this potential ending diagonal. Of course, the 4 and 5 need, of course, to be question marked, but it would be awkward to see such a impressive B wave, I must admit, in the sense that that would be then a regular B wave of some very large A, B, C flat. That's why we say this is a low risk setup. We've reached the target zones, we've reached the CSA levels. So now we have to see if we can get follow through to the upside over the next few days, which is our preferred point of view. But again, beggars can't be choosers. And all we want to see now is a move back above last Wednesday's high to confirm that we are indeed in the 5th wave higher. That would be wonderful. That would really conclude my work as solid, so to say. But I have no signs of a reversal just yet. So be patient. But again, once we are in those target zones, we have, of course, the low risk, high reward. I can't say it often enough. Setups. And that's where we have to go by. And then we'll have to see if it works out or not. Of course, you want to preferably buy a wave 2 low instead of a wave 4 low, right? Because you never know if the 4-5 sequence is going to happen or not. But because at least you got a 3rd wave, which can also be a C wave, right? So that's why you always want to bank on the 3rd wave and less so on the 5th wave. But in this case, there's still plenty of potential upside left to make it, in my humble opinion, a worthwhile endeavor. But in the end, you are in control of your own trades. I am merely pointing out what I'm seeing. And last week's update, we showed you, okay, we did not get to that higher price level that we were originally anticipating. We had been anticipating for quite a while. It was our first wrong call, I think almost 6 weeks. So, once in a while we'll get it wrong, but that's okay. I think we're getting close to this bottom for this wave 4. The technical indicators look pretty good. Once again, most of the time when we get in these type of extreme overbought conditions, then what we see is, of course, a pullback from those levels before we move higher. And that's still what we anticipate, that we should see higher prices contingent on holding above these warning levels, that this wave 4 is about to complete before wave 5 kicks in. Take care. trade safe. And if you have any questions, never hesitate to contact me. I'm here to help. It's not easy. And sometimes my explanation might not be thorough enough or good enough. And then I apologize in advance. I'm always trying my best, but I'm only human, so I'm not perfect. Take care, trade safe. Catch you all next week.